Hello, everybody. Welcome to this webinar brought to you by Wealthford in collaboration with CLSA Securities Malaysia. Our webinar title today is Riding Malaysia's Tech and AI Manufacturing Wave. So, thank you everybody for tuning in. My name is Shin Chu. I'm the moderator for this session. So thank you for spending your precious Saturday morning to join us in this session to learn about tech and AI manufacturing wave, okay, especially how it impacts Malaysia's semiconductor players. So as you know, artificial intelligence is no longer just a buzzword. It is reshaping industries, driving massive demands for chips, servers, and also automation worldwide. So Malaysia, as a key player in the global supply chain, is well positioned to ride this transformative wave. So how can we, as retail investors, tap into this growth story and trade it effectively? So where are the opportunities in this wave? What is the outlook for the tech sector? Okay, so I'm glad you tuned this session whereby we'll dive deep into AI and Malaysia's role in the global technology supply chain. So today we have invited a research analyst and structural warrant specialist from CLSA Securities Malaysia to speak on this topic. Now, before we begin, disclaimer: whatever we share in this webinar is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment or trading decision, you're solely responsible for all your investment risk. So we have two speakers on this webinar. So they will take turn to begin the presentation. So I'll invite the first speaker. So he's none other than Mr. Ku Zhenye. So Mr. Ku is an equity analyst covering Malaysian equities for 8 years, primarily in the technology and electronic manufacturing sectors alongside glove, auto, and gaming industry. Previously, he was an equity analyst at CGS International, covering consumers, and an MBSB research covering media, plantations, and construction. So, Mr. Koo, okay, good morning. How are you
Morning.
today? Okay, I should
Good,
call you Zhen
good.
Ye, okay? How are you
Yeah,
today?
good, good.
Okay, pleasure to have you here on this webinar with us. So we can't wait to learn from you about the technology sector, the AI automation. So feel free to take over the screen control.
Okay, thank you very much, Shane, for the introduction. Let me share my screen. All right, can you guys see my screen?
Yes, perfect.
All right, let me set it up. Good morning, everyone. Thank you for spending your time Saturday morning with us. And I'll talk more about I'm Ku Zhen Yi. I'm the equity analyst of CLSA Securities Malaysia, covering the technology sector. And I believe there might be some beginners in terms of tech. There might be some experts or well-versed in the technology sectors. But I will give an overview of the sort of what is a semiconductor and what is the global supply chain and what is the spillover effect to Malaysia and what are the opportunities that we can look at in this kind of AI era. So without further ado, I will probably start with the basics. Like, I mean, the picture that you see here is a lot of components and chips, semiconductors, but what is a chip and what is a semiconductor? So basically, if you see the picture over here, these are all, we call it chips, and semiconductor chip is actually a part of a semiconductor, and semiconductor is actually a component that actually act as like a conductor, which is like a metal which can let the electricity to flow through, and also like an insulator like plastic. So semiconductors are actually used to create with so-called transistors, and they are like a tiny switches that can turn on and off of the flow of the electricity. So it's actually in your everyday life, whether you use your laptop, you use your iPad, iPhone, washing machine, fridge, it's actually contain semiconductors inside the devices. And these transistors, when you combine in large numbers, can process and store information. Like a computer can store data. Like you can save your file, Microsoft Words, in your computer. It's because enabled by transistors and also enabled by these semiconductors. So and these transistors for more advanced chips like you see in this picture over here, this is already packaged and already inside this contain a lot of chips, and it can be as small as like it's small as like you see these fingernails, fingers kind of pictures. It can be as small as this. So, and it contains in all your devices, that electronic devices that you use. And in one chip can probably contain about 208 billion transistors. You can imagine so many transistors, very small components contained inside these chips, or even inside these small chips. They contain billions of transistors. So it's kind of it's really sort of a magical in terms of manufacturing, be able to contain so many transistors in these chips. So now we know what is the sort of a semiconductor and it's a chip. Basically, is to control the flow of electricity. And it's you can't see in your eyes, because when you open out the devices, then you can see all those boards and chips inside all those devices, if you see one. So now we know what is a semiconductor and chips, but how is it being made? So this is a more simplified version. It contains a lot of processes to do chips, but when we start from the basic, it's actually made out of sand, and it's very magical. It's, a lot of people didn't know this. It's actually made from the chips. It's actually made from sand itself, and goes through a very high smelting process temperature, and then we get the silicon. So silicon is the base material for your chips or your semiconductor, and it's very abundant. Sand is very abundant and affordable, and a very sort of having a stable structure. And if you add a little impurities on it, some processes, then it become a wafer. So basically, if you see this wafer over here, you can see all these small square actually are all, we call it chips. They are all chips. Chips are all made on this wafer based on the silicon, and they add a lot of processes, which I'll explain probably later. And you can see a lot of small chips over here. And after that, these are all being diced and packaged into a chip. All this green thing, this chip will ultimately make into your devices, into your iPhone, your fridge, your aircon, whatever needs control of electricity, and on and off. So this is a more simplified version. And if I go into the sort of semiconductor supply chain, because it's very important to understand, all these semiconductor sales components are being sell or sold globally, and you need to understand where we are and what are the supply chain looks like in terms of semiconductor. And it's basically divided into two parts. One is the front end and one is the back end. So what are the front end? So the front end is basically the design of the chips. So if you can see here, the design of this green thing actually contains a lot of different designs, or we call it sort of like a patterns in printed on these chips. And this chip can perform a lot of different functions. So there will be a design phase to design the chips. Then after that, the design of the chips need to make it into an actual chip. So we call it fabrication. So fabrication means you need to actually coming out with the chips in terms of this green thing. And after that, it need to be diced, because you see a lot of this square stuff eventually need to be diced it into be a kind of chips. So that process of dicing it, cutting the wafer into individual small chips, is actually, we call it back end stage of the supply chain. So then you have other support equipment, services, materials that eventually will go into helping the design phase, fabrication base, and then the packaging and testing. So I think in this particular session, we will talk more about the back end, because Malaysia actually is one of the big players in terms of the back end packaging and testing, in terms of the semiconductor supply chain. And so in this session, we will actually talk more about the back end testing and packaging. So these are all the processes which will go into making a chips. It's a lot of processes, and this is also another simplified versions. And this in this sort of flow is how you see a wafer, like I shared earlier just now, a wafer made from sand and ultimately into a wafer. And then there's go through a lot of processes in order to become a chip finally. So in this flow of the functions, this part from the starts until all the way to this called EDS is actually mostly to the front end. It's called front end wafer fabrication. Come out with the actual chips and on the wafer, but it can't be put into your devices yet because it's very still raw and very prone to sort of damage. So in this front end of the process, mostly in this year from the start to EDS side, we call it front end mostly, and they are mostly done in Taiwan. So we are not a big player in this for Malaysia, but from the dicing part all the way to the packaging is where Malaysia I think excels at and one of the big players. So we dice the wafer into individual chips, then we put it into some of the protective materials and sort of connect the chips to the electronic components, and then we package it into we package it into a black case, like you see if you see from this earlier, like this black case. So inside here, this one is already been packaged. And after that, you will go through some testing phase, which is also a key key capabilities of Malaysia in terms of testings of the chips. Make sure that it can be used, make sure that it can withstand sort of a high temperature, because when you use your devices like your iPhone, it get heated for a long period of time, and it's make sure the chips can withstand that kind of temperature and also usage. So before being tested, then we will package and then send it. They will send it to the customers or send it to the assembler, EMS player to be packaged into your phone, your machine, etc. So this is a more procedure, simple procedures and the processes of how a wafer turn into a chips. And we talk about the semiconductor supply chain. I want to talk about some of the key players in the global supply chain, because semiconductor is a very globally integrated kind of supply chain where one country excels at one function, and Malaysia also has its own specialties. And I talk about the front end and back end. And so this is the value chain from upstream down to the downstream. So upstream and midstream is actually the design and the front end where the wafer is made. And then after that, it goes into the back end assembly and testing. And I believe maybe some of you already heard all these names. All these are household names and like Intel in Malaysia for a very long time, since 20, 30 years ago. And but in these sessions, I will probably talk more about the back end assembly and testing phase. And I just in these slides, I just want to highlight two things. So one thing is this company called foundries. What is a foundry? Foundry is where the chips are being made. All the processes I told you earlier just now, the front end of the semiconductor supply chain, where the wafer turns into a chips before being packaged and diced, is all done by foundries. They're purely just making chips. And there's this one company called TSMC. I just want to highlight this TSMC. And this TSMC is called Taiwan Semiconductor Manufacturing Corporation, and it's the largest foundries in the world. And they are they are very crucial in terms of AI as well, as I will talk about more later. And I think they are one of the few in the world that can produce the AI chips in their facilities in Taiwan. And so after TSMC, I will talk more about on the second phase, the back end assembly and testing. So I just want to highlight these things. So foundry is a TSMC. The things that the name I want to highlight, and after that is the offsets. And so I think I want to talk about more of what is the offsets. So offsets is actually outsourced semiconductor assembly and test. So when TSMC they come out with the chips and the wafers, and they need to be dicing that I talked about just now, dice and then being packaged and then tested. All these TSMC will sort of ship all their wafers, not all their wafers, I mean ship some of their wafers over to Malaysia. And Malaysia is the outsourced semiconductor assembly and test hub, where we receive those wafers and we will dice it and we will help to assemble and then package it and then send it to the customers. So offset is where Malaysia is a big player, and it involves cutting the silicon wafers into chips, packaging them, and before testing them for functionalities and ship to customers. So I just want to highlight these two things here in these slides, and for all the other stuff, probably in another session will be as more suited. And why is it so important? And to highlight this too, because Malaysia actually commands about 13% of the global back-end chip packaging, means involve dicing this wafer into, and then you go and package it and then tested it. And Malaysia is actually the world's sixth largest semiconductor exports in Malaysia. And this is not really, I think, well known throughout the last decade or years before semiconductor becomes a hot topic. And because during the COVID-19 phase, there's not enough chips, and all the countries, they don't receive chips from other countries, and they cannot produce their cars, they cannot produce their electronic appliances on their own. They don't have enough electronic devices, fridge, washing machine, cars especially. So now it becomes a hot topic, and now Malaysia just realized we are actually one of the big players in terms of the semiconductor exports, especially in 2024, and it's still going quite strong. And you can see it is a growing business in Malaysia, and especially mostly are in Penang. All the semiconductor companies mostly are in Penangs. So Malaysia has been wanted to move out the value chain, but we will slowly get there. But for now, we are the big players in sort of the back end chip packaging and testings. And now we will go into the important part of AI. So, I mean, AI is basically artificial intelligence, and I believe mostly associated with ChatGPT, like the app that you use. Probably, I know everyone probably already downloaded the app and tried to use it, and they can answer so many questions. Even from the kids are using it, college students are using it, but what actually make the sort of AI possible, or the chat GPT can answer your questions so well, and even can answer the most difficult questions in the world, and they even like can sort of win the chess competition, etc. And it's so widely used right now. And what make this possible is because of GPU. So what is a GPU? GPU is the most important chip right now, and it's called graphic processing units, originally designed to sort of speed up the creation of images and videos. And you can see this is also one of the chips that's produced by this guy. I mean, I'm not sure whether you heard of this guy, but I'll talk about this later. So basically, what is the GPU graphic processing unit is actually commonly found if you use your gaming laptop. If you're using a laptop right now, and yeah, especially gaming, and you'll probably see NVIDIA, this name, and most of it will have GPUs because it makes your graphics so much better when playing the games, and make it can play your games much more in a more better way. And now these GPUs actually can be used for make the AI possible because of their processing power. And so this GPU is actually founded by this. I mean, it's designed the GPU design right now for the AI is the produced by design in terms of GPU design is produced by NVIDIA, and it is founded by Jensen Huang, which is this guy. And because of the AI boom, NVIDIA is actually now a more than 4 trillion company. And this guy actually worth 150 billion kind of net worth after his share price boom. And we are starting to see this kind of AI share price boom sort of having a spillover effect into Malaysia. And now this sort of GPU, NVIDIA is a US-based company, and they design the GPUs, and ultimately it's being produced in Taiwan by TSMC, the name that I told you earlier. Yeah, so and these two companies are the only one right now can be able to produce these GPUs, which can enable your ChatGPT and your AI sort of the boom. And it's quite the application of this AI and GPU and how it makes into the app is I will explain later. So I just want to highlight like the AI boom, how fast is it in this era? And you can see based on this time to reach 100 million users, in terms, you see ChatGPT is the AI, the hottest AI app right now, and it take 2 months to get to 100 million users. I think now it has a lot more users, and the reasoning behind this ChatGPT AI, because it's been so pervasive. You can ask them any questions you want, and even how you plan itinerary, and you see it in your everyday life. In terms of questions, I think that is these are all enabled by AI and also GPU. And of course, now you have a lot more AI app coming out, not just ChatGPT. You got Gemini by Google, you got Copilot by Microsoft. Probably if you are working in your office or anywhere, you are actually using those application, I presume. And for me myself, I'm using ChatGPT quite a lot. I'm a paid users. And so, who are the companies behind this AI boom, and what causes it? And behind all this ChatGPT, there's so many data that need to be processed. Like you feed in information, then they need to come up with answer for you. So where are the database hole? And where is your data and processes, your images being stored and being processed? And whom enable this thing? So all this data and the information that you flow in need to be stored somewhere, and they are all actually being stored by data centers. So data center is where they host your data, store your data, and they need a massive amount of data centers in order to enable ChatGPT to answer your questions more effectively. So it's mostly still driven by US-based companies. I believe people here mostly know about Microsoft, know Meta, Instagram and Facebook parents, Amazon, Alphabet, which is the parent of Google. And they're going to spend about 1.6 trillion between 2025 to 2029 because of the AI boom to build AI data center. So this is how AI data center looks like. And you can see all these red racks here and all these racks here inside all contain GPUs. All contain a lot of chips, a lot of GPU chips by NVIDIA chips inside all these servers in order to be able to process and store your data. And whenever you ask a question to ChatGPT, there is a processors, there is a data being processed into all these AI data centers. And the demand is so huge that there's not enough data center for it. And that's why we can see a data center boom, I mean, in Malaysia as well, in Johor. And that is what enable the sort of AI opportunities, what we see right now, and also what led to ChatGPT. So all this money flow, when they spend so much money on all these AI data centers flowing into the economy, surely there will be companies that are gonna be benefited from it. And the sales keep on increasing, and starting to see a spillover effect into Malaysia as well for some of the companies. And I'll talk about it more later, and like who are the beneficiaries. So, but because of this AI boom, we're actually seeing the semiconductor sales very robust. So, I mean, this is just a chart to show you that we are still in an upcycle. You can see semiconductor is normally a very cyclical industry. So it moves up and moves down. So it looks like we are actually in this cycle, in the upcycle. We're currently now in the upcycle. You can see like in terms of first half of this year, since 2 years ago, it's actually in an upcycle trends. And these are all because of AI. And because of AI, there are a lot more the GPU chips that I've said earlier just now. They are still continuing to expand and selling a lot more GPU chips and all the other chips as well. And actually going forward, I sort of I sort of expect so that kind of semiconductor sales to continue trending outwards. Because right now you got AI, and sort of the other semiconductor sales for the legacy sales are actually still, we see going into the second half into 2026, 2027 is still very sort of healthy. And we believe this can continue to stay at a very elevated level in terms of sales, at least over the next 2 years to come. So this is more on a semiconductor sales outlook. And I think I'll come to this part where I will talk more about where are the sort of AI opportunities are and where Malaysia sits in, and what are the companies within Malaysia that could see some potential positive spillover effect, and maybe talk about the names that some you may be interested. There's a lot of names here, but I probably won't talk most of it. I would like to first maybe highlight assembly and test, because that's where Malaysia very strong at. And in Malaysia, I probably just talk about three offset companies. So in this assembly and test, in this column is actually offset, like I talked to you guys earlier just now, outsourced semiconductor assembly and test. So Inari Emetron Berhad is a listed counter in Malaysia, and they are now the biggest offset company in Malaysia in terms of market cap. So Inari, basically they helped. So whenever Inari, they help to package and test the chips. And what they are very good at is they're very good at is packaging and test the chips they are currently using in your iPhones. So I just want to give an illustration. So in your iPhones, if you disable it, disassemble it, then you can see all these chips here, these black casings here. This, we call it front end module, radio frequency front end module, which makes it possible for your phone to receive calls and telecommunication. So it's a very important chips in your iPhone. And the Inari is basically help to dissect the chips and then test and package it and ultimately go into your iPhone. So that is their key capabilities, and that's what make Malaysia such a key hub as well, and is one of the enabler of iPhones. So Inari is the largest offset in Malaysia. And but other than that, you got Unisem, which also doing offset businesses, and they are in the phase of turning around. Probably going into next year, they are having a new, more efficient plans. Then whenever they move into that, they can make it more efficient, cost lower. Then you can see profit something coming in. So I think Unisem is also one name that is, you can see sort of outlook doing quite okay. It's a turnaround play within the offset space. And the other name that I want to talk about is also this Malaysian Pacific Industries Berhad. It's called MPI in short. And they are also doing offset. And this MPI is very interesting because they actually benefit from the AI. They are actually doing the chips for they're doing the power chips. So the power that will make the electricity flow and then power the sort of AI servers. So the AI server you talk about is AI data centers, but you just they basically MPI is the one who tests and package the power semiconductors used in AI, but it's only 10% of their revenue. But the other businesses is actually, they are all seeing, like MPI, Unicef, Inari, they are seeing all their different segments of the businesses actually seeing a bottoming and also in a recovering phase going into second half and into next year. So these three companies want to highlight in terms of assembly and test for the offset sites. And the other company I also want to highlight is Franken. Franken is a sort of, like just now I talked about the company that make chips in Taiwan, called TSMC, and Franken is actually helps to clean the equipment for TSMC, for TSMC to make chips. So after they make the chips, the equipments maybe get dirty, and then they need to be cleaned, and then in order to be reused. So Franken is the company that helps to clean the equipment periodically, and they are seeing very strong demand. They do not have enough capacity to cater for the volume, so they're actually now expanding their capacity. And so the outlook into the second half into next year, and they actually can see, because of this AI boom and the customers like TSMC expanding a lot of capacity, they can see the visibility until 2030. So Franken is one of the Malaysian name, we call in the tech names in the support services, which is having a very strong outlook going to second half into next year. And I think probably in terms of these equipment manufacturers, we also do equipments, means our Penang company, they assemble machineries, equipment, and being sold to the global markets in terms of the semiconductor chip testing. Like talked to you guys earlier about the back end semiconductor packaging. They need to be packaged, they need to be tested. So you can the those testing and packaging need equipment, especially testing. So in terms of testing of the chips, actually, I mean, our Malaysia companies like Pentamaster is actually providing the equipment to test the chips. And we also have Vitrox here. They do inspection equipment. So inspection equipment meanings that inside the chips, there are a lot of components inside. And you need to inspect whether they are correctly aligned, put in the right place, and can be can be used eventually. So Vitrox is essentially also, I think, the second largest company, second largest big tech company in Malaysia, because they sell globally. It's a global champion. They sell their equipment to globally across the world, to use their equipments to inspect the chips. So so that is the equipment manufacturers. And so actually Franken has a very direct link to TSMC. They help TSMC to sort of clean their equipment. So the Franken has a direct connection to TSMC. I just want to highlight that. And I probably go to the other segment that I want to highlight is the precision engineering. So like I probably just want to highlight UWC here. And so what UWC does is that they fabricate, like I talked to you earlier just now, there is a fabrication, EMS fabrication component parts. And so UWC actually do precision components for the front end equipment. So front end, as that's why I mentioned Malaysia is mostly in the back end, assembly and test, but we also serve the front end kind of industry. So when you want to make your chips, like I talked about earlier just now, TSMC, when they want to produce a chip, they need equipment. So we call it front end equipment to make the chips. And for those chips, they need a lot of components and a lot of components that go into the machines. So UWC help to fabricate some of the components. They are being put into the front end equipment in order to produce the chips. And they are seeing very strong demand in terms of the front end equipment because of the AI boom. People are expanding capacity and they need a lot more of those equipments, means they need a lot more parts. So UWC actually is servicing one of the global companies that is in very important in producing the chips, and they are seeing a very strong sort of sales visibility in the years to comes. Yeah, so I just want to highlight, I mean, UWC in terms of the EMS and precision engineering part. Yeah, and I won't go into too much of the other companies. If you have any questions, I'm more than happy to answers for the specific companies or the industries, etc., etc. Yeah. So I think this sort of concludes my presentation. And if you have any questions, just let me know. Yeah.
Thank you so much, Zhen Yi, for sharing with us about Malaysia tech outlook and how our Malaysian companies can participate in this tech manufacturing and AI wave. Yeah. So if any question, you can write your question in the Q&A box. Okay, and Zhen Yi will address your question during the Q&A. All right. So make sure you pay attention in this webinar because we will be launching a quiz later after the second presenter to test your knowledge. So for the top 5 participants with higher score, will walk away with 100 ringgit touch and go e-wallet reload pin. Yeah. So so join us in this session and with full attention. Okay. So I'd like to introduce our next speaker, who is Miss Sophia Ideal. Miss Sophia is an equity derivative sales specialist at CLSA Malaysia, focusing on structured warrants. She has over 7 years of experience in the Malaysian structured warrants market, including 1 year in Indonesia. So prior to joining CLSA, she was with RHP Malaysia and RHP Indonesia. So Sophia, good to have you here with us on this webinar.
Hello, thank you, Shane. Can you guys hear me?
Yes, we can see you now. So I
Okay.
will stop sharing my screen and hand over the control to you.
Okay, thank you, Shane. Okay, I hope you guys can see my screen.
Yes, we are looking at your screen right now.
Okay, great. Hello, hi, everybody. Thank you. Thanks a lot for dialing in the morning of Saturday. My name is Sophia Diana. You guys can call me Sophia. I'm with warrant team of CLSA Malaysia. For today on my side, I would like to just share with you guys a trading opportunity, specifically structured warrants that you guys can use as a tool to gain exposure to the market in the Malaysia. So I'm sure there's a beginner who have heard about warrants and also intermediate who have heard but not too familiar. But regardless, I hope these sessions can cater to every one of you guys. So if you guys have any further questions, don't worry, you guys can um, drop me more questions I will answer later, or you guys can also contact us. I will share the details at the end later. So without further ado, let me just go into, okay. So without further ado, let me just go. So what is structured warrants? Structured warrants is a financial instrument that is listed on Bursa Malaysia that is track the performance of the underlying instruments. So structured warrants is usually issued by a third party financial institutions like CLSA Malaysia, also with other 7 issuers in the Malaysia. So how structured warrants work is that it track the performance of the underlying instruments and also give you guys exposure to these instruments, however, at a fractions of the price. So usually it is issued over multiple underlying such as stocks, index, ETFs, over foreign or local underlying, among others. So what makes structured warrants very attractive and why is it a good investment opportunity for you guys to capture? So one of it is the features of the structured warrants itself, which is gearing effect. So what is gearing effect? So gearing effect is a features that allow an instrument to gearing to for example, how do I say it? Gearing effect is an effect where the performance of the warrants to move at a bigger percentage when the share price itself increase. So in these situations, right, if you guys have seen, I have to pull out one of the warrant, which is Farm Fresh Berhad, as well as the farm. Sorry, one second. Okay, sorry. Okay, so gearing effect, what happened if you guys have seen over the past few days from the 25th September to 25th September. So the share price of the Farm Fresh has increased over 11%. However, at the same time, our warrants of the Farm Fresh C25, which has issued over the Farm Fresh, has also increased over 71%. So if you guys see it, right, the percentage increase of the warrants tend to move at a lot way bigger rate compared to the share price itself, which make the structured warrants more attractive if you invest in the structured warrants compared to the share. However, it is also very important for you guys to know that the reverse is also true. So if if the share price increased when the market go bullish, the share price also will, when it reduce, it will also reduce at a bigger rate as well. So the second one is a capital outlay. So what is capital outlay? So capital.
Okay, apologies for a technical glitch. Looks like Sophia is disconnected at the moment. So why don't we invite Chen Yi back for a short Q&A while we are waiting for
Yep,
Sophia to
sure.
dial back in, okay? So we have a question from Elaine who asks, what is your outlook on the impact of the US tariff in the semiconductor industry in Malaysia?
So far, initially, a lot of people thought it's a front-loaded sales because the semiconductor tech companies in Malaysia right now, like Vitrox, Penta, they are all seeing first half the result is very strong. So a lot of people thought it's front-loaded because of the tariff, which they just announced, I think, in August. They've been delayed to August. But right now, we are still talking to them. We know that the outlook is still very strong. And because the direct exports to US is not very big for our Malaysia tech companies. It's very small, less than 10%, and sometimes less than 5% for Vitrox. And because all this, they supply, all our tech companies at Vitrox, them all mostly serve the Taiwanese, China tech supply chain. So US is still a very small part. So the direct impact is not that visible. And because of this AI boom, they're actually still seeing very strong and healthy sales. We even going into the third quarter and fourth quarter. So the direct impact in terms of the tech companies here is very dependent on which segment they are at. So like if they are in, so far we always see in the offset space and the equipment space, they are not as affected, especially equipment players, because the equipment are producing the machineries to enable people to produce the chips and test it. And those part of the business is still very strong. It's still expanding capacity, and they still require machineries. And so the equipment play is a clear winner in this tariff environment, especially. And because of US tariff, a lot of capacity, a lot of factory need to be built in the US, Europe, or around the world, and they all need equipment to support. So this in terms actually give us benefit, Malaysia, in terms of equipment players lah. Yeah. So the direct impact on the tariff so far is not very visible. But if you are a company that is doing consumer US-based consumer devices, like the VS, SKP, those company they're making US devices in Malaysia and then ship to US, having a big exposure. Those company then may be facing reduced orders, or facing the tariff where the customers might ask them to share the tariff costs. But so far, when we talk to the tech companies, they are the customers are sort of absorbing the tariff so far. Yeah, they do not ask like Vitrox or Penta to share the cost, and our Malaysian tech company also try to avoid going to that route lah. Yeah.
All right. So equipment space like those ATE lah, automated
Yeah,
testing
IT,
equipment
yeah, Penta,
supplier
Vitrox, yeah, very
still
strong. Yeah.
expanding the capacity, and outlook are looking pretty bright lah, huh, from
Yeah,
your
yeah,
view.
yeah.
Okay. So the next question from Yok One is, what about SAM engineering equipment?
Same engineering, I think they are also exposure to the front end equipment space, and that one I think is still quite healthy based on my recent engagement. The front end side is healthy, but they're also doing aerospace equipment. So I think the aerospace has been a bit dragging on their earnings outlook. So it sort of they gate their front end semiconductor sales boom. So I think this company, when one part is doing good, the other part is not. So it sort of negate that kind of strong earnings outlook. But if the aerospace were to come back strongly, probably going into next year, then maybe we will see some sort of a reversal in terms of their outlook lah. Yeah.
I see. Thanks for your view. The next question by Key is, kindly share more about Opstar and Skychip current status and outlook, please. These are the
Okay.
two listed company on IC design, right?
Yes, Skychip is not yet listed. Skychip is a pre-IPO company. I think they are looking to list in the next few years, or next we're not sure when they will list. But Skychip is one of the, I think, one of the sort of leader lah in terms of IC design in Malaysia, Malaysia based lah. Yeah. So Opstar is the one that is listed in Malaysia. I think 2 years ago when Opstar listed, the valuation got very high and they reached like 1.5 billion market cap. And now the share price sort of crashed, and now they are only like 300, 400 million market cap. So I think the issue is because previously they are providing IC design services, they are outsourced design services to the Chinese IC design company. And during that time, Chinese get a lot of subsidies, and then they open a lot of IC design houses and they outsource their services to Opstar. So that's when Opstar having their revenue boom and strong profit. But after, I think just recent 1 or 2 years, the Chinese subsidy sort of stopped for the IC design houses, and a lot of Chinese IC design bankrupt, and that led them to that don't have any. You can see they're going into losses. So their strategy right now is still very much try to get those IC design services from third party, but it's very scarce. So because of this, Malaysia government now trying to move out the value chain. So they partner out with the arms, or come out with the design blueprint for Opstar to have opportunity to learn and to eventually having their own chip design, like Nvidia. So Nvidia is an IC design house as well. So but Opstar is still very much a very small player, and they eventually they recently say they partner with this Taiwan company called Eventech. So Eventech is actually an assembler for some, it's an original design manufacturer for some devices, for electronic devices. So this Opstar trying to collaborate with this Taiwanese design manufacturer to eventually come out with a chip that can be used in some of the products. But it's still a very much work in progress, I would say. Yeah. So in the near term, I don't see any sort of positive catalyst, etc., or outlook for this company. Yeah, until they can really prove that they can come out with a chip that can be used in some of the application devices.
All right. So the next question is about your view on the prospect of hard disk related players such as Dufu, Notion, JCY. What is your view?
Yeah, I think I don't look at them that in depth, but what I can understand is because of it's also driven by AI. Yeah, because of the AI boom, you need a lot of high bandwidth memory, which is produced by Micron, HBM, and High Micron, HK Hynix. So that led to the short supply of the components going into this AI server. So we can see a spike in the memory prices like HDD and hard disk drive. We can see the prices starting to having the positive catalyst that's flowing through. So Dufu, Notion, they are not doing the most high-end hard disk drive or for the usage of AI, but they are getting the spillover effect because of the short supply in the high-end space where the big players are allocating capacity to the high end. And then you can see this back end of and I mean the legacy more or the old traditional products like HDD, all those are seeing a short supply as well. Those are still in demand. They are still need to be put into some of the application, but the ASP is way lower than the high end. So so Dufu Motion, probably they can get some short-term spikes in terms of products sales if their HDDs prices on the move, but it's still very much dependent on whether this thing is sustainable for those for the products that they are doing. Yeah, because it's very traditional. So when the capacity picks up, the memory prices like HDD will go down very quickly, and they are not really exactly direct exposure to the AI space. Yeah, so short term wise could be okay, but I mean, not whether it's sustainable or not, it still remains to be seen. Yeah.
All right. Thanks, Zhenyi, for addressing a few questions just now on hard disk, on chip design, and for the US tariff impact on the Malaysia tech sector. So we'll just resume back to the topic on CLSA structured warrants presentation. So our speaker, Sophia, is still facing the technical glitch, so it remains unresolved. But the good news is that there's another colleague from Sophia, Zach, who will step in to resume the presentation. Okay, Zach, over to you.
Hi everyone.
All right.
Sorry about the technical glitch. Yeah, just a quick self-introduction of myself. I'm with Sophia on the CLSA Equity Derivatives team. Some of you might have seen me previously before in some other events. So I'm just going to try to jump back in where Sophia left off earlier. And sorry to interrupt the Q&A session, which I thought was going really well and very interesting. So I'm just going to quickly really run through my part of the presentation about warrants. For those of you who are seasoned investors in structured warrants, you probably know about this already. So just bear with us, right? Why people invest in structured warrants? I have used quite a different example. I understand from Sophia earlier, I saw she was trying to show using the FarmFresh Berhad's share price movement and the structured warrants movement over the past few days to illustrate both the benefit and also the so-called risk of investing in structural warrant. So in case you have been following very closely, FarmFresh Berhad had a double-digit gain 2 days ago, right? And of course, the mother share price went up by 10%. Our warrant price went up by 70% over the same period. All right, but yesterday, of course, the FarmFresh share price came back off about 5%, and the warrant price was down about 30%. This was a very simple illustration of the leverage effect warrants can have on your investments. So if you can see on the screen here, there's another example where YTL Power, a very popular name as well, had a 28% run earlier, about a couple of months ago, and at the same time using structural warrants, you can have made over 100% return. Right. I would personally like to highlight a bit more on the keys of investing with structured warrant. What are the keys when you're trading such a leverage product where there is a big up and down move? It's always good when we're making money, but when things are not going our way, we tend to want to find out a bit more. What should we do? So here are some key advice that I would bring up. First of all, always have a take profit and stop loss level. Be very disciplined and do your homework on the stock, which is why I think everyone is here today. Everyone has a lot of questions for Cool, which is beautiful. And I like to always remind people that technical analysis, charting, of course, is a great method of deciding your trading, but it does not work on structured warrant. So what it means is that do not look at a warrant's price chart and try to look at the volume and your buy sell levels. It does not work. Technical analysis only works for the underlying shares. Okay. And lastly, there is no such thing as a shortcut or free money. I hear this term a lot, right? Is negative premium or free money, right? Is there a magic number that means that, I buy this warrant now, I can make free money from the issuers, right? There is no such thing as a free money, right? When something looks too good to be true, be it in structural warrant or in investment, it is usually too good to be true, right? So I'm just going to go into a bit more of a technical side of things when it comes to investing in structural warrants. I'm not going to take up too much of the time, just going to make it short and sweet, right? So number one, right, when you're trying to invest in structural warrants, let's say you're very bullish about the prospects of some of the name that Koo mentioned, for example, MPI, Inari, after looking at or listening to what Koo had to say earlier, you thought, hey, I'm quite interested in Inari now. And instead of buying the shares, I would like to explore using warrants to trade this exposure. How should I do it? Right. And the reason for using warrants, there's twofold. First is if you think that, let's say, Inari can go up 10% from here, but maybe you want to make a bit more, maybe you want 20%, 30%, warrants might be a good idea. Or if you want to buy Inari shares, but you think that maybe I don't have a lot of capital. I just want to use a little bit of capital and gain some exposure to Inari. That's another reason to use structured warrant. So here's important money shot number one. How should I trade Inari structured warrants? This is our website. Go to tradewarrants.my. Under tools, warrant search, and click under the underline, look for Inari's structured warrant. And then it will list down all the Inari warrants we have at the moment. Okay. And then from this warrant search function, you'll see that there's a lot of columns, there's a lot of different information on there. What are some of the key terms we need to know? The first key term we need to know is the exercise price, right? Why? This is because almost all the core warrants, all the structural warrants in Malaysia are core warrants. So the moment you buy one, you basically hold a bullish view of the underlying instrument. So go back to Inari as an example. It means that when you buy an Inari core warrant, you expect Inari share price to go up. So the ultimate best outcome for everyone is that the Inari share price goes above the exercise price. That's the first thing to note, the exercise price. Second thing you need to note, expiry date, right? Because structural warrants have expiry date, unlike a share where you can hold on to for a long time and wait for the bullish sentiment to realize itself. You would need a structural warrant to work out in your favor by the expiry date. So it's very important to take note on when's the expiry date. Do not trade a warrant that is very close to expiry date due to something called the time decay phenomenon. We try to avoid that. And the next two are very key, important parameters to take note of. The first thing is called effective gearing. Right, so what does it mean is the leverage effect of the returns is the effective gearing. We go back to our previous slide using Inari as an example. These two Inari core warrants, sorry for a bit smaller here, and then these two Inari core warrants have very different kind of profile. For example, if you think that the Inari share price gone up by 10%, right? Inari C3M with an effective gearing of 5.4 times will give you, if it does say the mother share price go up by 10%, it's going to give you 50% returns on the warrant, right? On the other hand, if we are using Inari C3Q as an example, if the mother share price goes up by 10%, you're going to get a 30% return on Inari C3Q. So this is what this yellow column effective gearing means, right? But if you're just thinking, why would I buy 3.2 when there's a 5.4 times gearing available to me, right? That's because of the other catch on this column next to it. It's called sensitivity. As you can see, we measure in ticks. So what does sensitivity means? Sensitivity actually measures how responsive is the underlying share price to a structural how sensitive is the structural warrant price to an underlying share price change, right? So it's worth noting that it is a mutually exclusive benefit to effective gearing. So what this actually means that the higher the gearing, usually the sensitivity will be less so. So what this means is that it's a bit like I like to use transportation method, right, to illustrate this point. So when a structural warrant has a very high gearing, it usually is very insensitive, means that it will take a lot of movement in the underlying share price for the warrant price to move. Okay, so it's like a very fast car, but it takes a lot of time to start up, right? And it takes a lot of fuel to get it started. A bit like a rocket. You need a lot of fuel, a lot of preparation, but once it starts up, it goes to the moon, right? On the other hand, a sensitive but a lower effective gearing warrant is a bit like an EV. You press, it goes to a certain speed very quickly, and it's more responsive to the underlying share price movement. That's how I usually like to think about it. Lastly, just like to bring up the premium measure. A lot of people, when they invest in warrants, only look at the premium, right? So a lot of people think that low premium is good, high premium is bad, right? That is quite a huge flaw to this logic, because premium itself in Malaysia reflects the degree of the price of the underlying instrument needs to move before the break-even price. So what this means is that a low premium structural warrant in Malaysia actually is just very close to or above the exercise price. And another thing is, depending on your investment view and depending on how long dated is the warrant, the premium change as well. A warrant with a long time to expiry will always have a higher premium than a warrant that's expiring, say, 2 weeks later. Right? As I mentioned earlier, if it's too close to expiry, it's actually very risky. If we go for a low premium warrant and ignore the expiry date parameter, you could be in for some very risky trade that, in the worst case scenario, could lose quite a bit of money there. Right? So these are the 5 parameters that I usually would advise investors to take a look at, and it's very important to choose one that suits your need. Right? Usually, on a very normal circumstances, if you're doing a long-term or mid-term view, like what you're learning from Cool today, you probably look for an expiry date that do not go for the last 1/3. All right, that's what I would say is a good rule to follow. Let's say a structural run has a 6 months expiry period from the day it was issued. Do not go for one that is in the last 2 months of its life. If, of course, the rule goes on, if it's a 1-year structural warrant, do not go for one that has 3 months of expiry. The reason being, the last 1/3 of the life of a structural warrant would usually see the most severe time decay. Right? So hopefully that is useful information to share with you today. And on the screen now, I'm just quickly screenshot some of the factors that affect structural warrants price. Again, I would like to highlight that 90% of the warrants in Malaysia are call warrants. So the up arrow means that the higher the parameter or the factor is, the higher the call warrant price is going to be. Right. So as you can see, with the exception of time to expiry, most of them are positively correlated. All right, here's an important shot number 2. This is something called a price matrix or warrant matrix. You can find it on our website as well under tools, warrant matrix, right? There's 3 key pieces of information that you should look for in a warrant matrix. The first one are the key terms that I shared earlier. So as you can see, we have put the exercise price, expiry date, and effective gearing up there for your easy reference. Always take a look at these parameters when you're buying. Key information number 2, look at the middle of the table, where there's a lot of price levels that show both the mother share price levels versus the structural warrant price. Why is this important? Is that we go back to our earlier discussion about discipline, about take profit and stop loss levels. Using this very transparent price matrix, it can allow you to time your trades a lot better, right? And the key thing number 3 is just trying to highlight that if you can see, I don't think it's very obvious, but if you can see at every flipping point we call the circle area, you can see that the color tone changes a bit. So for example, using Franken C42 here, from 18 cents to 18.5 cents, you can see that the tone change. So it takes 4 price levels for one tick change. This is what we meant by sensitivity. And using this as well as a 4 tick sensitivity for blue chip stock like this means that this warrant tend to be quite a well-balanced, good for any other bullish investors, which is why we can give an effective gearing about 3.4 times as well, right? Expiry date is February next year, very reasonable. So I think this screen, rather than it's not a buy recommendation for Franken, I'm not asking you to buy this warrant as well, but it's more like trying to illustrate to you how using a warrant matrix can let you plan your trades better. All right, and lastly, role of a market maker, right? So I'm not sure how many of you in this call have heard of CLSA before today's webinar. Thank you for taking a chance on us and listening to myself and Ku and Sophia speak, right? So I'm just here to highlight that we are actually the latest market maker for structural warrants to enter into Malaysia, right? The second foreign market maker as well. Of course, the first one is Macquarie. And alongside ourselves, there's a total of 8 market makers for structural warrant in Malaysia at the moment, right? So just like to highlight a bit what we do besides issuing warrants and conducting webinars is that the most important role for a market maker is actually providing the quotations for the structural warrant to support the trading environment. In short, yeah, we are the liquidity provider. So why is it important to pick or to know the market makers? Because every market maker have different practices. Very important is that when you make money, you want to be able to exit your position without a fuss. You don't want to be in a position where the structural share price has gone up by 30%, and then you hold 100,000 unit and you can only sell 1,000 unit at a time. Right? This is when the market is illiquid, when the market maker did not do anything wrong, but they did not provide enough liquidity for you to facilitate your trades. This is not what we're looking for. So what we want is that we allow investors to enter and exit positions at minimum fuss, basically allow you to realize your profits or break even or even just stop loss without having to worry about liquidity issues. Right? So if you are keen to check us out, go to your trading apps on Monday when the market open. Do have a look at liquidity, because I'm very confident that we are the #1 liquidity provider for structural warrants in Malaysia at the moment. And lastly, I get this question a lot whenever I conduct structural warrant events. Is a lot of people ask, what happened at expiry and how is the expiry price calculated? And most importantly of all, some people also ask, knowing this rule on the screen, do you push down the share price to basically game us a structural warrant holder, right? So let me just quickly illustrate. If I have a call warrant, exercise price 1 ringgit expiring on the 10th of the month, highlighted in yellow on the screen, right? How is the closing or the settlement price calculated, right? So there's 2 school of thoughts in Malaysia. The first school of thought is using VWAP for the last 5 days of structural warrant life. We and some other issuers use the closing price for the last 5 days of the structural warrants life. Basically, the dates highlighted in blue on the screen, which is 3rd, 4th, 5th, 8th, and 9th. Right? We use the closing price on these 5 days, take an average, and let's say it's 1 ringgit and 10 cents. It will mean that each warrant holder will get 10 cents from the cash settlement. So if it's 130, of course, you'll get 30 cents average, right? So, but if in the event that the 5 days average is below 1 ringgit, then you'll get nothing from this settlement, right? So as you can see, it's not hard to imagine that if, especially when using the closing price, if the warrant issuers try to push down the price on these last 5 days to game investors, it's highly possible, right? But I would like to stress this a lot, that we do not do this, and also the regulators will not allow market makers to do this, right? Basically, you are playing a flawed game, right? So our trades are highly monitored by regulators, especially around the expiry dates. We cannot execute trades that is gonna disadvantage our warrant holders. But then again, going back to this point is, I'm not trying to ask people to not hold until maturity, but as my experience and my academic background has taught me, from derivatives point of view, I highly do not recommend people holding a warrant on the last 1/3 of the life of the warrant. Again, as I mentioned earlier, 6 months, the last 2 months, there will be something called very severe time decay. If you hold on to it for the last 2 months, even without considering the issues at settlement of the settlement's price calculation, you are putting yourself in a very disadvantaged position of the time decay. All right. So yeah, this is gonna be my last slide. Thank you for your patience. So if you have any more questions, you can call us. This is our warrant hotline 2056 0320567888. All market hours during work days, you can call that number. We have a website, tradewarrants.my. You can check out our website as well. And lastly, just a disclaimer, I'm obliged to say this, that this presentation has not been reviewed by SC. So yeah, thank you so much for your patience. Back to you, Shin.
Thank you so much, Jack, for stepping in to talk about CLSA structural warrants. Okay, so CLSA is the latest issuer of structural warrants in Malaysia. So if you're keen, you can trade those companies that that are issued by CLSA. Okay, for trade those warrants issued by CLSA. All right. So okay, I hope that you have paid attention to the presentation by both speakers. We will open the floor to Q&A, right? So if any questions, ask any of our speakers, okay, whether Zhen Yi or Zach, right? You may write your question in the Q&A box. Okay, we will do our best to address your question within the next 10 minutes. Okay. Yep. Any question for Zach? You may also write down in the Q&A box. Yeah. Okay. Let's follow through with the question submitted earlier on the tech sector. Okay, so James Lee would like to ask, aside from the US semiconductor industry, there seemed to be a huge rise of Chinese semiconductor industry in recent years in terms of chip designs and foundry use. What do you think that will mean for the Malaysia semiconductor industry, and which company will stand to benefit from this?
Yep. Probably answer this question. Yeah, I think recently we see the Chinese actually expanding capacity and their use is improving. Their technology is also catching up. But I think it's still quite a few years behind in terms of the US, but they are getting there. And what it means for the Malaysia semiconductor companies or sectors in the Pacific is that we need to move out the value chain. If not, we will risk losing out our competitive advantage to the Chinese eventually because they're catching out and we might lose some of that competitive advantage. So we need to move out the value chain. That's for sure. And that's going to the more front end, like I mentioned before. We are good at the back end. Now we need to move at the front end. But within the back end space, there are actually a lot of innovation going on as well. So we are also Malaysia trying to move out the value chain. And Malaysia still has some clear competitive advantage in terms of technological capabilities. And what are the companies that I think will benefit from this if eventually China, in terms of their front end wafer fabrication, their semiconductor use is improving, design, is the equipment maker first and foremost. So equipment makers like Vitrox and Pentamaster, their China sales is about 30 to 40% of their total sales. So they are actually having a large chunk of their sales, 1/3 is in the China. So like China, Huawei, Xiaomi, or Oppo, or the EV companies in China, or SMIC, they are all actually buying equipments from our Malaysia equipment manufacturers like Vitrox for their inspection equipment and Penta for their testing equipment. And we are still having an advantage in terms of our software as well as our machinery. And with the Chinese expanding capacity in this semiconductor industry and they continue to invest more, they'll buy more equipment from Malaysian manufacturers, which are clearly still quite in advance compared to their Chinese peers. So we see there's an advantage like so let's say Vitrox and Pentamaster. And for other players like Offset, like I mentioned just now, like also Jack mentioned, Inari, MPI, Unisem, they all have Chinese capacity. They all have plants actually in China to serve the Chinese companies as well as the Western companies, but based in China. So the Malaysia advantage is that we are neutral. So we can actually do both sides of the business. Whereas the Western companies based in China, they were more likely to use Malaysian offset like MPI, Unisem, Inari capacity based in China because they are non-Chinese. But even though they are based in China, yeah, but they are Malaysian owned. So there's a clear advantage for our Malaysian players over there. And if since Chinese semiconductors were to really boom and they will need a lot of chips, they will come out with a lot of chips, and those chips are eventually need to be tested, packaged, and eventually some of them will also use our Malaysian manufacturers or Chinese or Malaysia offsets players based in Malaysia. Yeah, so I see the beneficiary could be Pentamaster, Vitrox, Inari, MPI as well, Unisem. They think these are more exposed to the Chinese markets. And this is something that we are very good question because it's something that we are tracking very closely as well. Yeah, because I mean we have CLSA CITIC is a China company, so we have very much touch point on there. And the recent visit to China is really they are really catching up, and they are still one notch lower, few notch lower, but they are trying their best to get there, and probably they could make it. Yeah.
All right. Thanks, Chen Yi. The next question on my screen is what issues are Malaysia's semiconductor companies facing right now that will affect their strategy moving forward? So this question by Yi Ting.
Yeah, so this question actually is very much also tied back to the first question asked just now. I mean the previous questions about China. So China is catching up fast. So even though we are still leading in terms of the equipment capabilities, but the Chinese peers are also trying to do domestic substitution because the China government is trying to having the whole supply chain to themselves, and they're trying to develop all the technology by themselves, such as EV. They have sort of control that kind of movement. So the issue is the Chinese competition is really coming in, and they can offer the price, same product, maybe lower a bit, the performance is lower by maybe 10%, but the price is cheaper by 30% and can be used with for other applications. So that makes the price competitive in for our for our Malaysian manufacturers or semiconductor companies operate in China, have facing some challenges in terms of this. So they need to continue to come out with more innovative products to continue to serve the market and to hopefully ease down the price pressures. Or they could eventually operate in China, having a China plant, buy Chinese components, branded in as a Chinese players and sell to the Chinese market. So it's both a challenges and also opportunities. And the other second challenges is always talent. So I mean Malaysia having the brain drain issue, and we need a very advanced engineering talent where they study overseas, but they normally won't come back, or they come back and they work for a while, then they have the opportunity overseas, then they go to Singapore. That's for example. So that leads to higher wages, higher labor costs. So that is also one of the major challenge for Malaysia tech companies. That's why you have academy coming out, or like Vitrox having their own campus academy to train technical talent as well as engineering talent, so that we ensure we have proper supply of the engineering talent that can help to Malaysia to move out the value chain, as well as for them to innovate. Yeah. So Malaysia, the one challenges is Chinese competition, and second is the labor, and I think the last one is the technologies. I mean, we are quite advanced in the back end page, but we are still quite far away from the front end. And I think Malaysian tech companies, they also admit that it's very hard to get into the front end, but they will try to get there eventually. So they need to partner out with sort of a more advanced players, uh, like let's say Taiwan companies, Taiwan vendors, they have the technological capability to produce certain equipment, but they hold the IP, the intellectual property, they have the technological know-how. So what the Malaysia companies would do is that they partner out with those the technological leader, the know-how, and but they can help them to make their components or equipment more cheaper, more effective, and outsource their sort of manufacturing components to Malaysia, and then we can eventually move out the value chain. Yeah. So these three are the main challenges. Yeah.
All right. Thanks, Yi, for sharing your perspective. The next question is addressed to Mr. Zach. Okay. So we know that CLSA is the latest issuer of structured warrants in Malaysia. So the question from Lim is, what makes CLSA warrant different from other issuers?
No, thank you for the question. So there is actually, I would say, three major things that set us apart from other issuers. The first one is the liquidity that I mentioned earlier. So this one really, when you're trading on the on your trading apps, or you can visibly see the difference. When we market make our structured warrants, we tend to put in a very huge buy and sell orders. This is to provide for better liquidity to allow investors to buy and sell more easily. And also we have very tight bid-ask spread. I think this is the first thing that we need to highlight. Secondly, is the quality of the matrix, right? So the matrix, I think just draw back to what I shared earlier. There's a total of 8 market makers in Malaysia. 5 of them publish a so-called matrix on their website, and only 5 of them refresh it rather frequently, right? And the one major thing that makes a CLSA warrant matrix even better, besides the matrix being published and refreshed frequently, we actually use live Bursa Malaysia price feed into it. So when you refer to our matrix, it's always based on the live prices that is being traded in the market. I think we are one of the 2 issuers who do this. I'm not going to name the other one, but you probably can figure out when you actually look through our websites. And the third thing, also, if I think I see a lot of people have a lot of good questions. You probably would have figured by now the third thing that truly sets CLSA apart is really the quality of our research team, right? We are one of the best research house in Malaysia, and actually half the Malaysia head of research was CLSA alumni. Uh, Even currently, we have Huzeni and a lot of other very strong research teams supporting us, making very good decisions and very good calls that support the pricing and also the selection of our structural warrants. And of course, we're also supported by very strong global research capabilities, which is why we have very good visibilities. And I dare say not many analysts would be able to answer maybe the question about China just now, where Ko was very seamlessly, he knows the whole ecosystem, not just in Malaysia, but globally, he knows all these facts very well, right? It's something that not every research house will be able to provide, right? So these 3 factors, I think, truly set CLSA apart from the other issuers.
Okay, I think just maybe just my own question, because CLSA is lesser known to the retail investor because you are institutional broker in Malaysia. So maybe you can tell us more about CLSA background, so we can understand CLSA better.
Okay. All right. Very good question, Shane. All right. Just a bit of a background about ourselves. CLSA actually, the full name is in French, is Credit Lyonnais. So it was founded many years ago in the 80s in Hong Kong by 2 French financial journalists. All right. So their original founding principles are they wanted to be a research company that is different from back then what the other Asian research houses were doing, right? So how the company evolved throughout the years were very research centric, um, very advanced in research methods and also in the kind of calls that they were making. And until 2013, our company was taken over by CITIC Securities, which some of you may know is the largest investment bank in China. So we are now a Chinese-owned so-called foreign research slash equity house that is based in Asia Pacific. Our headquarters is in operating in Hong Kong. Although our parent, of course, is based in China, we have presence in many countries around the world. Besides Malaysia, our ASEAN hub in Singapore, and also New York, London offices, Japan, Korea, Taiwan. Yeah, so we have a very extensive network of offices around the region.
So when I look up your info on website, it shows that you are the only stockbroker that have membership in all Asian exchanges, right?
That's correct. Yeah,
Yeah,
we
that's
are. I think
fantastic.
we pride ourselves in having that. Yeah, actually, you are right that we are the only equity house in the world that has the presence in all the Asian exchanges. Yeah.
All right. So we still have a few more questions. Maybe I'll just take a quick one. So, Ethan would like to ask, how should investor view Malaysia semiconductor stock compared to global peers? Are they more defensive, cyclical, or growth oriented? What direction do you see semiconductors industry heading in the next 5 to 10 years? Zhen Yi?
All right. So I think Malaysia, as I mentioned earlier, we operate quite in the back end of the semiconductor supply chain. So I wouldn't say it's more defensive than the global peers. And Malaysia tech companies in general are actually service and provide service and products to the global players. So those global players are actually customers of our Malaysia tech companies. So I wouldn't say they are defensive. They are at the mercy of their customers. And cyclical, I think the global peers and Malaysia tech companies are generally quite cyclical in nature because if the customer doesn't do well, they also doesn't do well. So it's quite in sync. So normally we will track the global players, what they are doing. We know their key customers and whether the customers are doing well, then that will sort of inform whether our Malaysia tech companies will be doing well as well. And whether it's growth oriented, that one is debatable, but I think sometimes because Malaysia being on the back end stage and having a lower base, I think sometimes we have more growth opportunities than the customers in terms of growth rate. So I mean the customers still need to grow as fast as they can, then our Malaysia tech companies only can grow, but we can serve a wide range of customers. So maybe one customer is not doing well, but the rest of the companies are doing well. Then the Malaysia tech companies then they can grow generally from a sort of lower base like just now, a lot of people answer correctly. Franken is the direct connections to TSMC. So TSMC is a global name. Everyone knows them, and in the semiconductor players, they are one of the giant. There is no iPhone chip without them. So but Franken, being a company that clean equipments for TSMC, they don't have just TSMC as a customer. They have a lot of equipment manufacturers, and those equipments need to be clean. And it's a very recurring model. They need to clean the equipment almost every 5 days, 10 days. They have equipment to be clean, and their growth rate is very strong. They are seeing sort of kind of 25, 30% kind of growth rate all the way through to 2030. So actually, they are quite a growth-oriented company, I would say, if compared to TSMC. They are one of their larger customers. So in this respects, I think growth-oriented is I think one of the segments that we are seeing. So for over the next 5 to 10 years for Malaysia Semiconductors, it's quite far away, but now TSMC being the largest customer can see visibility until 2030. So because of AI, there's so much demand, and don't have enough supply. And I think Malaysia companies need to continue to do well on their own expertise, but they also need to be able to move out the value chain. In terms of the front end, they need to move to the front end, being able to come out with the front end equipment, and not the major front end equipment, but as long as they can break into sort of the windows, the fringes of the front end equipment, I think it's already a big growth for Malaysia companies. And also in terms of the offset capabilities to be able to do advanced packaging for the AI. Yeah, so for Malaysia Semiconductor industry, I think it's still growing very well. Over the past 10 years, they've grown by so much, and over the next 10 years, they have so much in place. And I think with the government support, Malaysia in the semiconductor industry should able to see continued strengths and growth. But in terms of companies, then we need to be very selective. Yeah.
All right, so let's do one last question from Azim. So, Zhen Yi, what do you think of Apple move to in-house chip solutions such as the Apple N1 and Apple C1 chip to the semiconductor market in general?
Yeah, I think this is a very specific question, and it's very depending on the supply chain of Apple, which is quite vast. And for Malaysia, we don't really get affected by this. It's more on the global player side. Yeah, I think some of the Wi-Fi chips, etc., last time do by Qualcomm, one of the big player suppliers to Apple. But Apple decided to insource it. So it led to the revenue sales loss to Qualcomm. But so it doesn't really affected us that much. Uh, and in terms of semiconductor market, it doesn't really get affected because I mean the supplier is get cut out, but Apple still need to produce their own chips. So those chips will still made in TSMC and still contribute to the semiconductor sales in general. So it just do it in-house or you do it like outside of suppliers. So mainly affected the suppliers. But it doesn't affect like I say earlier, Inari doing the RF chipset for iPhone, which for Apple. So that one doesn't get affected because Broadcom they serve Broadcom. So Broadcom is the RF chip supplier to to Apple. So Broadcom has and Apple is still very strong. They had a relationship. They still continue to supply. There is no talk about in-source the RF component, and and actually they continue to see, and Broadcom actually signed with Apple to do AI chip. Means Apple want to do their own AI chip with Broadcom. So actually this is a long-term opportunity for actually Inari to be able eventually maybe can help to package and test the AI chip. Then that is a sort of they can bring Inari to the next level and Malaysia as a whole to go to the more advanced front end space. Yeah. So that's the answers to that. Yeah.
All right, so that shall conclude our Q&A session. Thanks, Zhenye, for giving us a very deep insights into the AI and tech space in Malaysia and which companies are involved in this supply chain. And thanks, Zach, for teaching us about structured warrants and how do we use it and what kind of what are those terms mean and how do we use it to complement our trading objective. Okay, thank you so much to both gentlemen. So with that, thank you everybody for tuning in to this webinar in the morning. We overrun by 8 minutes. Hope that it was okay with all of you here. All right, so hope to see you in our next webinar. We have a few more series with CLSA Securities Malaysia, and hope to see you in our next session. Okay, bye bye everybody.
Thank you.
Thank you.
Bye
Thank you,
bye.
everybody.
Good weekend.
Bye.